It's a new month here at Henssler Financial, and we found 3 important things to focus on in the market this month. Number 1, first quarter earnings season. With the first quarter now in the rearview mirror, investor attention is set to turn to earnings season as companies begin reporting results from the first 3 months of 2024. The S&P 500 posted year-over-year earnings growth of 10.1% in the fourth quarter of 2023, and Wall Street estimates for the first quarter of 2024 stand at 5.1%. If the energy sector is excluded, that growth rate improves to 13.7%. 7 of the 11 sectors in the index expect to see an improvement in earnings relative to a year ago. The communication services and information technology sectors have the highest expected earnings growth rates for the quarter at 26.8% and 20.9% respectively, while the energy sector has the weakest anticipated growth compared to a year ago, with earnings forecasted to have fallen 25.1%. With the S&P 500 trading at 24 times trailing 12-month earnings and nearly 22 times forward earnings, it's important we continue to see meaningful earnings growth from companies to justify the premium valuation relative to history. Number 2, inflation. I know, we talk about inflation every month, and you're likely just as tired of hearing about it as you are tired of seeing the cost of seemingly everything continue to rise. That being said, we're talking about it again because at this point, it seems the Fed's next policy move hinges almost entirely on this inflationary data. While the Fed continues to suggest cuts to interest rates this year, it won't be ready to do so until it sees, quote, more good inflation readings and is more confident that the growth in prices is moving closer to its 2% target. So, this begs the question of how many more months of moderating inflation will give the Fed the confidence it needs to cut rates. Nobody but the Fed itself knows the answer to this question, and it makes each month's inflationary readings very impactful on the direction of stocks. If inflation runs hot, we can expect the likelihood of rate cuts in 2024 to move further out into the year or even into next year. On the other hand, if inflationary readings do indicate a further cooling, perhaps the Fed announces its first rate cut in June as the market suggests at the time of this writing. While inflation has certainly cooled from its 2022 highs, the last mile is proving tougher. Underlying inflation, which excludes volatile food and energy prices, slowed to 3% in the second half of last year across advanced economies, but has since moved up to 3.5% according to JP Morgan estimate. Keep in mind that financial markets started the year with 6 to 7 cuts priced in over the course of 2024, but are now anticipating just 3 cuts after signs of resiliency in the U.S. economy increase confidence in the likelihood of a soft landing. Number 3, the Magnificent Seven are now the Fab Four. The hottest trade of 2023, known as the Magnificent Seven, has lost some of its luster so far in 2024, but the stock market is still heading higher, closing out the first quarter 10.55% higher, its best start to a year since 2019. Despite the index making new all-time highs, 2 of its biggest constituents suffered double-digit declines, with shares of Tesla shedding nearly 30% and Apple down approximately 11%, leaving the newly dubbed Fabulous Four continuing their historic rise. These Fabulous Four consist of Nvidia, Meta Platforms, Microsoft, and Amazon, which are responsible for nearly half of the S&P 500's first quarter advance, according to S&P Dow Jones. So, what does this mean for the broader market? Is it bullish or bearish? While only time will tell, some investors are suggesting this is a bullish signal of improving market breadth as the S&P 500 continues to rally even without participation of 2 of its largest members. All sectors except the real estate sector have participated in the gains so far in 2024, and arguably more encouraging is that smaller companies have participated, as evidenced by the S&P Mid-Cap Index gaining 9.94%, nearly in line with its large-cap peers. On the other side, some worry that the divergence in big tech stocks could be a sign of exhaustion in the rally and question whether future gains will be harder to achieve from here. The S&P 500's market value has swelled more than $9 trillion since late October, and the index has already set 22 record closes in 2024. And that has been your Market Minute for the month of April. Thanks for listening.